I'm going to go over a 2-minute sweet spot trading strategy. This, if you're the type of person that needs to be in a market constantly scalping, this strategy is not for you. But if you want to try to pull out consistent profits and pass these evals and get a payout, this strategy could drastically help you if you are disciplined enough to sit and wait for a setup. You might have to sit 2 or 3 hours to only get one or two setups, but that's all you need. You only need one good trade a day and you can book like $500. Now, if you take one good trade and let's say you take a stop out and there's no other trade, so be it. Move on. Come back tomorrow. Tomorrow's another day. I have red days. Every trader has red days. You just got to keep them small. So let's go over the 2-minute sweet spot strategy, and then I'll show you on the chart kind of like what I'm looking at. Now, the long example for the NQ, the VWAP needs to be sloping upwards. Now, it doesn't need to be a drastic slope up, but it better not be sloping down. And also, the price needs to be above the VWAP. I didn't write that in there, but price above VWAP. And the reason it needs to be above VWAP is volume weighted average price. Now, these institutions are not using all these indicators that we retail traders use. They don't care about that. But I'm telling you, they do care about the volume weighted average price. Now, they don't look at it the way I'm looking at it on my chart with the yellow line. This is my custom VWAP uh, indicator that I wrote. And I'm going to be putting this up on the site because we're going to be having the session VWAP and the New York VWAP, and you can choose whichever one you want, and then change the color. But they know where it is. They look right over here on like 24/7/48 for this day. They know, oh, okay, price is above the VWAP. They know, and they use the volume weighted average price. So, and the price pulls back towards the VWAP. Now, this is not absolutely needed. If you're in a trending market, that might not happen. And also absorption. There has to be large green bubble holding. You, you can't have a green bubble and then have the price below the low of that candle that produced that green bubble. Or if you have a red bubble and the price closes above it, that right there is telling me absorption. So, and also nice stacked imbalance. And I'll go over a stacked imbalance. And it has to close above the imbalance area. Okay. And enter on the break of the candle. You can either do a starter position at the stacked imbalance because most of the time it'll just pull back and then you can do a starter. And then once it breaks the high of that candle, you can add to it. So let's go over real quickly on the chart what this might look like. Now, for the first 10 minutes, I do not trade. And you want to know why? Because look at these wicks, up, down, then we kind of slammed down, then we slammed up. I don't trade in this area. Now we have a stacked imbalance right here, and we had a large seller right here, and you had a large seller right here. So you could possibly try to get in on the break of that candle right there and try to get out. That's on a 45-minute. If you want to do, the opening range breakout strategy, you can. But what I'm looking for is, and I did this trade. It took me an hour. I sat for an hour waiting for this. And I remember this day. We were chopping around, and we sat for an hour. And I made one good trade. And the good trade was right here. We got into the trade and then made 50 points. Okay, that's good. On one contract, that's $1,000. You're good for the day. So why did I take this? Well, for one, the VWAP was slightly sloping upwards. Right here, it was slightly sloping upwards. It was kind of flatline, but as you can see here on this candle, we're slightly sloping upwards. Okay. This really wasn't a strong signal, but it was still a signal. And the reason is because you have a large seller right here, 104 contracts. You have a large seller here. You have a large buyer here that stepped in. We kind of pulled back. we had a buy imbalance right here. That's showing me absorption because we went back down to the VWAP, but then right here, this right here, you have to read the market because the market tells you a story and you have to read it. This right here is a sell imbalance, but we did not go lower. We closed above the sell imbalance. So what is that telling me? Sellers are getting absorbed. That buyer got absorbed, but now this battle, this auction area, the market is looking for new value and it found it to the upside. So we closed above that sell imbalance. Then we had this 104 contracts kick off and we closed above that contract. We closed above these contracts, these sell areas, and we have a stacked imbalance. Now, we didn't close above the stacked imbalance. I really like it when it closes above the stacked imbalance. That's a stronger signal, to be quite honest. But what I saw was the absorption of this contract right here. Plus, we kind of drifted down and we had 203 contracts. I mean, that right there is institutions buying this. This large bubble right here, institution. This large bubble, guarantee you, institution. You don't have retail traders trading this kind of size. These are institutions. And then you have a stacked imbalance. But once we broke that stacked and balanced high right there, you can go ahead and get in. Where's your stop? Your stop's probably down here. And then we have these small dots right here. These small dots is what's called persistent buying, which means it needs to tick up. I have the persistent buying. What do I have it set to? And balance settings is set to 4 and 3. And the persistent buying, where is the persistent buying? Right here, persistent duration ticks. It has to tick up 3 times with a minimum volume of 10 per tick. So it has to tick up 3 times. It has to tick up a quarter, a half, a 3/4, or whatever, but it has to tick up 3 times with the right amount of volume. And we've got three little dots right here. So that's like 9 times that it has ticked up. Now, granted, they closed below, but this buyer right here is support. So you can get in right here. Where's your stop? Possibly down here, because if that 213 gets taken out, you're going back to the VWAP more than likely. Now, you don't want to be doing that because if you got in here and you try to get out at the VWAP, that's like 100 points. I mean, that's kind of crazy. But what you can do is that you can go in here, get up. Once you see this buy and balance start getting absorbed and we start moving down, you can go ahead and get out for like 30 points. Or you can sell half of your position. And then you can, once you see this large seller right here, but we closed above, once we had this hangman candle and we started closing with this large seller right here and we started drifting back down, you can go ahead and get out for about 40 points. That's a nice trade. That is what this trading strategy is about. VWAP sloping up, price above VWAP, check. Price pulls back towards VWAP. It really didn't pull back towards the VWAP because it was just too strong. Absorption, large green bubble holding, or a red bubble right here, red bubble. Actually, it's not a red bubble. It's more of a blue-violet bubble. But that blue-violet bubble got absorbed, and we closed above. We have a stacked imbalance area. Stacked imbalance closed above imbalance. It closed right at it. It's not very strong, but I would still take it. Why? Because of that large buyer right there. That large buyer was pushing it up. And once you broke that, you had that persistent buy-in, and then you enter on the break of the candle right here. And then you got yourself about 40 points. So that right there is the 2-minute sweet spot strategy. This right here, if you use this right here, you will be good. You might get 1 or 2 trades a day, but you're going to be consistent with it. And that is what you need. You need consistency. I'm going to go over a short that you could have taken with this. The VWAP. The VWAP is sloping downwards. As you can see here, we are definitely in a downtrend. We are sloping downwards. So we're definitely in a downtrend. So we had a stacked and balanced area. You did not see any large sellers. And if you don't see that, you might not want to go in your full size. You might just want to try to go in half your size and get a feeler going. So we had a stacked sell imbalance right here. And on this candle, we pulled back a little bit to that stacked and balanced. Now, right here is a telling tale of this. This is a 2-minute chart. So a 2-minute is going to give you nice, smooth, clean signals. A 30-second 1 minute is really fast moving and you're just hyper scalping. And a 2-minute gives you nice, clean signals, and a 5-minute is even better. That's really good. Of course, you're going to be taking a lot less trades, but if you want nice, clean trades, try and go with this 2-minute sweet spot strategy. We had a seller, stacked sell imbalance. Now, right here, we had buyers being absorbed. If you see this run up and then you see a buy imbalance and we close below that, that is telling me we had buyers up there, more buyers than sellers, but then the sellers took over and we just started drifting back down. And those buyers are getting caught up there. I don't know how many. There's not a lot because it's less than 30 because the 30 bubble of a buy didn't even show up. But what you could do is you can go in right here on the break of this candle right here. You can go in. You were already green a little bit. Then you moved back up. You might have saw that buy-in and then just cut it for a small loss. But then when you see it close below this again, you might have jumped back in. And a lot of times I will do that. I'll get in, get a feeler. I'll take some off. I'll try to get a runner, and then it moves back up to my break even, and I'll cut it. And I'll just sit there and wait. I mean, if we slam upwards, then great. I'm not in the trade. But if we close below it, it'd be like, okay, my analysis is right. So I get back in. There's absolutely no problem taking a break even and then jumping right back in when the market is telling you, okay, your analysis is correct. So, and if you did that, you come down here, you get a sell imbalance, and then we kind of drifted down, drifted down. We got buyers right here, large buy 30 contracts that come in. Let's say you get out right there. That right there is 30 points. So that's like a $600 trade. Now, let's go ahead and keep running through this. And these buyers are getting absorbed. Okay. That buyer got absorbed and we moved down. This buyer right here is absorbed. This one, well, it's really not getting absorbed. We're kind of basing out. So now we're into an auction area and the market needs to find value again. Is it going to find it to the upside or to the downside? We don't know. It looks like it's going to the upside right now and it's going to test the VWAP. But that was another valid trade that you could have taken is this sell signal right here and get in. And if you're in the trade right here, let's say you're in the trade with a couple micros and you're in the trade, and then all of a sudden you see another sell, you can add to the position. Let's say you got 2 contracts in here and you can add to your position. And then what you can do, let's say your cost average is right here, and then you come down here. Let's see. Let's say your cost average is around here and you come down here and you start basing and then you just get out. That's like 45 points. So 40 points, okay? I mean, let's say you got in, you're in 4 contracts and you got 40 points. Well, 40 points on a micro, that right there is $80 times 4. You're in about $320 winner right there. So you can definitely make money doing micros and then build up your evaluation to pass it or build up to a payout. If you start playing with the big boys and trading the minis, yes, you can pass evals and get payouts very quickly, but you also can blow up very quickly. And that's what you need to understand. You're not trading a $50,000 account. You're trading a $2,500 account because that's your blow up right there. $2,500 is your drawdown. That's your blow up level. So you're not trading a $50,000 account. You're trading a $2,500 account. And if that was your real money, would you be trading the minis? Probably not. Would you be trading the micros and try to get some small moves and build up 100, 200 here and there? Yeah. So why not do it here? I mean, I'm going to say something that's possibly going to get some people upset, but don't be a prop farming gambling degenerate. You need to learn how the financial market trades. And that's what I'm trying to show here is how you can give yourself an edge by reading orders that are coming in, these imbalance areas, large order areas that are coming in. That's what I'm trying to teach. Okay, the next trading strategy I want to go over, and this is still on the 2-minute chart, is trap buyers and sellers. Trading trapped buyers and sellers. What actually confirms that they're trapped? Well, it's aggressive buying and selling. They need to be large orders and failure to move price higher or lower. This is the key right here. Failure to move price higher or lower. You need aggressive buying and selling, failure to move the price higher or lower. If sellers hit with size and price cannot break lower, that is absorption. That equals trapped buyer or seller. Okay. Now, a long example would be the VWAP is sloping upwards. And also, it doesn't need to be like an aggressive slope upwards, but it needs to be above the VWAP. If you really want to be consistent with trading and you're just starting out, I would only take longs when you're above the VWAP and shorts when you're below the VWAP. Once you start understanding that and you're getting a little bit consistent, then you can start doing these counter trend trades because sometimes the price will trade way up below the VWAP and it's extended, and you really don't want to do that. You really need to read the market to understand, hey, do you is the probabilities of it keep going down? Then you can start trading like the counter trend trades and start taking longs to a snap back to the VWAP because the NASDAQ and the ES like to trade around the volume weighted average price. And these institutions use the VWAP. They don't use it like we do as like on a chart, but they know where that number is. Okay. And that number right here on this chart is 24,598. So these institutions know where the volume weighted average price is trading. Are they looking at it like this? No, they're probably looking at it on a depth of market ladder. But they know where the VWAP is. Now, a trade like this is how can you find a trapped buyer or seller? Okay. Well, when the price starts moving up, 930 opens up and we start moving up. Okay. Now, this would be a counter trend trade that is very risky for new beginners to understand this. And we're trading up, but what are we missing right here? What are we missing from 930 all the way up to around 945 up in this area right here? Well, we have a lot. We have contracts of 39 and 35. Now, my settings are 30 and above to be able to show the bubbles. But what are we missing? We're missing like 100, 200, 100. We're missing 50 lots, 100 lots. We're missing 200 contracts. That's what we're missing. We're missing large institutions aggressively coming into the market. So once you see this 35 right here and right here, this is huge. When you see stacked buy and bounce right here and we can't go any higher and we got absorption, we start trading down, then we have a 35 contracts come in and we close below. That right there is a trapped buyer. Now, it's kind of a small trapped buyer because it's like 35 contracts, then you got 39 contracts. But once you start trading below this area, here, let me actually kind of get in here and trade. Once you start trading below this area, you can go ahead and start testing the waters and put your stop up here. So you're about a 60 point stop. Now, are you going to trade that on a mini? I mean, if you have the account to do it, you can, but I wouldn't recommend doing that. I'd recommend trading like 2 or 3 micros and just build out a position. So what you can do is you've got some trapped buyers up here. You can go ahead and do a starter position right up in here. Okay, because you have these buyers right here, buyer way up here, buyer down here. You can do a starter position, and then once you see this large 33 sell contract come in, then you see all this area right here, buyers, and then balance area of more buyers and sellers, but they all got absorbed because we started moving back down, especially on this candle. And then you can go ahead and start taking half off for about 80 points back to the VWAP. Okay. That's a counter trend trade. That's a little bit more risky. And you have to be really disciplined because if you get into a counter trend trade like this and it starts trading above here, you got to cut it, man. You got to cut it. If not, you could get slaughtered. And if you're undisciplined, uh, y- you really don't need to be doing counter trend trades. You really got to know what you're looking for when you're doing this. But here, right here is a nice large trapped buyer right here. We got the VWAP kind of sloping down. As you can see, it's sloping down a little bit. We had some large contracts come in for selling. Then we had 290 contracts come in. It was probably trying to hold the Asian session here. So we had nice large 290 contracts come in. I can guarantee you that's institution buying right there. Now, once we started trading below it, you get in here, and then once you get down to this area, and we really can't break any lower, start taking half off. Get yourself about 40 points. Start taking half off. Because right here, we failed to make a higher high. We weren't trading, we traded above a little bit, but we closed below that 290 contract. So that right there, and where would your stop be? Well, if you get in here and you start trading above this 290, you can go ahead and get out there at about 40 points. Now, you would have gotten a 1-for-1 probably around here about 50 points maybe. I mean, that's fine. I know a lot of these gurus talk about, I want a 2-to-1, 3-to-1, or I'll take a full stop out. I mean, if they want to do that, go right ahead. What I'm trying to teach people is you have to read what the market is telling you right then and there. If if your analysis is like, okay, I think this is the trapped buyers. We got some large contracts in here, and you get in and it starts trading above here and you get out, you're like, okay, I'm wrong. I'm out. And then of course it went lower. I mean, you really have to position your size correctly. I mean, this is a pretty large candle. So if you trade it above the VWAP and you're at 100 points, well, I mean, that's kind of large. We traded above here. We kind of traded right above, and then we broke that area, and then you were in profits. So you really have to kind of be disciplined and know when you run it, when you want to get in and out. Now, right here, we have some sellers, and this right here is a consolidation area. When do you think it's going to break in a consolidation area? You have all this buyers right here. Then we had, I mean, all these sellers right here building a position, and then you had 154 contracts come in, and you broke that high. You ran up to the VWAP. You could have scalped that real quickly. You could have scalped that. These all these trapped sellers right here were breaking it. And you could have scalped it up here about 40 points up to the VWAP. That's a little risky to take. The other trade that I was showing you is this right here, stacked and balanced. VWAP is sloping downwards on the 2-minute, sloping downwards. We've got a stacked and balanced area right here. You can go ahead and get in here and put your stop up here to about 60 points. You can get in, come down here to the low right there and get yourself about 100 points. This is what you want to look for. If you want to try and scalp a counter trend trade, you got to have a tight stop. And when you see money, take the money. When you see it, take it. Especially when you come right up to the VWAP and it's sloping down. As you can see, we just kept it moving down. And if I keep running this, we'll just see what happens. We have a stacked buy and balance, but we really didn't trade upwards. Okay, here we go. So this right here, we're below the VWAP, it's flatlining. You have persistent buy-in with that little dot right there, persistent buy-in. Stacked and balance area right here, we closed above the VWAP and above that stacked and balance area. You could do a starter position right here. Let's say you do 4 micros. Do 2 micros right here. Once you see that persistent buy-in, stacked and balanced, we closed well above it. We didn't come to it, and then we broke that high right there. You can add to your position. You can add to your position, and then you run it up here. So if you add into four contracts, your cost average, if you got in here and then you get in here again, maybe your cost average is down here and you run it up to here for about 140 points. This is what you want to look for, but where are you getting out when you start trading below the VWAP? If your cost average is here and you start trading below this right here, below 50 points, you got to be disciplined. You got to get out. Of course, you got yourself over 100 points on that trade. Uh, Probably like 150 points maybe. I mean, a 50-point stop out on a mini, that's $1,000. So do you really want to be trading that on like a $50,000 eval account? Probably not. I mean, you could trade it if you got a bunch of them. I mean, you could pass them real quickly. But once you go into funded, you really need to be disciplined and use your micros and build your position, because a lot of people get in and they see the P&L negative 1,000 and they cut the trade, then it reverses on them. Well, that's because you're in too much size. You're in too heavy and your emotions cannot handle it. But this is a good trade on the right here, VWAP sloping up, price above the VWAP. Price pulls back towards the VWAP. It really, well, kind of pulled back a little bit, not very much. This is just a guideline, 2-minute sweet spot strategy. The pullback is just a guideline. I do like it like that. Sometimes the market's strong and it don't give you that pullback. Absorption, large green bubble holding. We didn't have any large green bubbles holding, but what we did have was strong buyer here, strong buyer there, and then we kind of drifted down, and then we kind of have persistent buying. We have persistent buying, and we have stacked and bounced buy areas that's holding. This candle closed above. This one was definitely a good signal, valid signal. Even if you didn't take this one, but you took this one here, and you came up here, and you get yourself about 100 points. I mean, that's awesome. So that's really all I want to go over. I'm going to try and do end of day wrap ups and show you what you could have traded. And eventually you will get this, but this is just a nice trading strategy that you can use, and it should help you out really good. And eventually, once you start trading this, I don't look at this. I just kind of understand and read the market well enough now that I can just kind of read and do a telling tale of when I see a large buyer like this on a large down candle, a large buyer of like 300 contracts, and we break the low. I mean, to me, that's a no-brainer for me. I'm getting in right here. And once I see that, I'm like, yep, we're good. We break that. Yep, we're good. We see this. We're not really breaking it. We're starting to run back up. I'm taking half off. I'm taking half off, moving to a break even. And then once I see this chop, I'm completely out. I'm done. And then right here, once you see all these sellers right here, all these sellers right here, you've got 35, 50, 30, 40, 50, 100. You got like 300 contracts up in here. 300 contracts. We don't know if that's just one institution or multiple, or some heavy hitting retailers. We have no idea. But what I do know is we did have a large buyer step in here. We got a large buyer stepping in here. We've got a 75 sell order that's coming in that's getting absorbed because we started trading above it, and we're breaking that. Where's my stop? Down here. Where's my target? Well, first target is $40 to the VWAP. Eventually, you'll start being able to read this, and you'll understand. Okay, see profit, take profit, hit the VWAP. I'm out. Okay, because we're sloping downwards, we are definitely in a down market, but you can scalp yourself some money, but you got to be disciplined and adhere to your stops. And if you get in here, what I like to do a lot of times is I'll get in, I'll see that persistent buy-in, and we'll move up. And what I'll do is I'll put my stop right below the persistent buy-in. Then we start moving up, I'll put my stop up here. And then we closed here, and I saw that large selling. What I'll do is I'll put my stop right here. Well, we didn't get stopped out. Persistent buying, stacked buying balance. I'll put my stop right here. And I'll just keep trailing it up and get stopped out right there for about 118 points. That's how I do it. So I just wanted to go over this trading strategy and let me know if it helps you out. Leave a comment. Let me know. Next week, if you trade it, let me know if you pass some evals or you got some payouts. Let me know what you think. It's a 2-minute chart. Get away from these high frequency trading algos because they own the market on these low time frames. They own the market. You and this indicator is built for market structure to be able to get some of these nice little swings. That's what it's built for. So I just wanted to go over the strategy and maybe it can help a few people. That's all I have. See you later.